Regardless of which election cycle it is, there's always a new politician that stands on a podium and claims that it's time to make the rich pay their fair share. And every election cycle the same thing happens, the rich don't. According to IMF, research conducted by economists around 2015 to 2018 claims that an estimated $500 to $600 billion was lost in tax revenue. And this was in a period where multiple pro-wealth tax initiatives were proposed by multiple senates in the United States, and even by Obama himself. It appears no matter how high you raise the top marginal tax rate, billionaires still get richer, governments still run deficits, and everyone else is told that it's complicated. And maybe it is, because on the surface, taxing the rich doesn't actually work, or should I say, it's not supposed to. Ever since before COVID in 2019, we've been alive to see the unprecedented hyperinflation of the hyper-wealthy. In the past few years, billionaires left and right have been getting richer by the second. In 2025 alone, the top richest billionaires in the United States increased their wealth by over $360 billion. And of course, this has been happening while the minimum wage has stagnated. Both the poverty and equality gaps have been increasing, and inflation on its casual skyrocketing spree. All of these factors combined have but recently been the fuel that's been causing the fire behind the phrase, tax the rich. Those who shout it, the masses, are being propagandized by the current state of the economy. But then again, that's all it is, propaganda, that helps reinforce a fruitless initiative. Because at the end of the day, taxing the rich doesn't actually work. The way most people imagine taxing the rich doesn't work. And I mean fundamentally, structurally, cosmically. It's not a question of political will or laziness. It's a question of how wealth itself exists today. First, how the rich earn their money. For those who live under Patrick's rock, unlike the average worker who earns wages and pays payroll taxes, the hyper-wealthy mostly earn through what economists call paper wealth, which sounds completely made up. But that's because it kinda is. Capital gains, real estate, and asset appreciation is where their money lives. That's wealth on paper, not actual money in the bank. Take someone like Elon Musk, for example. The vast majority of his wealth sits in stocks which he doesn't even sell. Because why sell when you can just borrow against them? Elon Musk can just take out a loan against his Tesla stock, buy another rocket, and pay exactly zero in income tax. It's the ultimate cheat code. Live off loans, die with assets, and let the accountants figure it all out later. And to make it worse, loans aren't classified as income by the IRS and are therefore untaxable. So you can raise the top marginal tax rate to 99.9% if you want to, and it'll still barely touch most of their actual wealth. Second, wealth is mobile. Capital flows globally faster than laws can react. Even if you somehow manage to aim at their wealth, good luck catching it. The moment a country tries to enforce a higher tax, money migrates, incorporated in Luxembourg, trusts in the Cayman Islands, and intellectual property registered in Singapore. It's all legal, of course, above board and designed to avoid triggering taxes in higher rate jurisdictions. You want to tax a billionaire today? I suppose you can if you hold the championship title for hide and seek. Third, enforcement is a joke. In the UK, civil investigations targeting offshore, corporate, and wealthy taxpayers fell from 1,417 cases in 2018 to 2019 to 627 cases in 2022 to 2023, a drop of more than half, which campaigners flagged as evidence for reduced proactive enforcement. That's not an accident. It's because the people you're supposed to audit are also the ones funding the campaigns of the people in charge of the audits. It's like asking a cat to investigate why there's suddenly less milk in the fridge. When the very people you're trying to tax help write the rules, enforcement becomes a polite suggestion, not a mandate. History confirms these patterns. France had a wealth tax for decades, from 1989 until 2017. The intention was simple: tax the rich to fund public services. The result? According to government studies, tens of thousands of millionaires emigrated or shifted assets abroad. Revenue fell short of projections and businesses felt squeezed. Sweden tried a similar model, eventually scrapping it after observing capital flights and investment declines. Even the US, despite decades of high top marginal rates, in theory, never fully captured the wealth of its richest citizens. Loopholes, deductions, and creative accounting ensured that the super rich often paid proportionately less than ordinary citizens. And the scale of the problem today is staggering. According to the Tax Justice Network's 2024 report, the world loses around $492 billion every year in legal tax evasion. Emphasis on legal. That's $500 billion that governments never even get to see, because someone found a way to make a holding company own another holding company, which rents intellectual property from another holding company, and at the end of that chain, there's a PO box in the Bermuda Triangle labeled Innovation Incorporated. But what if that's what they want you to think? Instead of perpetuating a narrative that claims that taxing the rich outright doesn't work, they perpetuate one that is in a more gray area. One that blames a faulty and unjust system, the very system they created in the first place. In the late 20th century, neoliberal economic thought, driven by well-funded think tanks like the Cato Institute, the Heritage Foundation, and the Adam Smith Institute, began to rewrite how we even think about taxes. That taxing the rich is either impossible, unfair, or counterproductive to economic growth. They also reconfigured the understanding of taxation to be comprehended as theft. It's the same reason why you see a bunch of posts on the internet with comments like, "Why should he have to give away his hard-earned money?" that ultimately defend billionaires as if they were one of them. The illusion isn't economic, it's psychological. In 2021, ProPublica released a massive investigation into billionaire taxes in the United States. They found that people like Jeff Bezos, Elon Musk, and Warren Buffett paid, in some years, no federal income tax at all. Simply zero. And it wasn't illegal. They weren't cheating the system. They were simply using it the way it was built to be used. It's easy to think of this as corruption. The truth is a bit strange, and even more strategic, because the tax system we have today doesn't fail to tax the rich by accident. It was engineered to work that way. So what am I trying to say? Does taxing the rich work or not? Well, let's rewind back to the beginning of the video. So you can raise the top marginal tax rate to 99.9% if you want to, and it'll still barely touch most of their actual wealth. First, the claim that wealth is untouchable because it's on paper is misleading. You can't tax what's not liquid sounds deep until you realize that's exactly what property taxes already do. Every year, millions of people get taxed on assets they haven't sold. Somehow, Jeff Bezos' stock portfolio is the one magical exception. Look at the post-World War II era. When top marginal rates were above 90%, the US didn't implode. It industrialized, built highways, and sent people to college, and even went to the goddamn moon. So much for high taxes kill ambition. The moment a country tries to enforce a higher tax, money migrates. Second, the idea that money will always escape to offshore jurisdictions ignores coordination. We live in an era of global cooperation. The OECD's 2021 Global Minimum Corporate Tax, which is an agreement between over 130 countries to set a 15% minimum tax on multinational corporations, regardless of where they are headquartered, is proof that governments can work together to reduce the ability of corporations and the super rich to arbitrage tax rates across borders. The same governments that can't agree on what counts as a sandwich somehow coordinated to plug a $1 trillion loophole. If the world can align on that, billionaires might finally have to pay for more than just super yachts and lawsuits. Enforcement is a joke. Third, enforcement isn't hopeless, it's underfunded. Audit rates are low today, yes, but that's not a limitation of the system itself. It's a political choice. When governments invest in strong tax agencies and modern tracking systems, returns are enormous. A study shows that every $1 spent auditing high earners yields roughly $6 in recovered revenue. That's not theoretical, it's evidence. We could fix this. But for decades, we've chosen to pretend it's an unsolvable mystery, like Bigfoot or trickle-down economics. History repeatedly proves that high taxation doesn't destroy economies. After World War II, Western nations taxed the rich heavily, and the result wasn't capital flight or stagnation. It was the greatest period of middle-class growth in modern history. Public infrastructure, healthcare, and education flourished. Productivity increased. Taxes on the wealthy funded the very institutions that allowed markets to thrive. If anything, it shows that the wealth taxation stabilizes economies rather than destabilizing them. So, does taxing the rich work? If you look at history, the answer is yes. If you look at power, the answer is no. The myth of you can't tax the rich is the most successful product the rich ever sold, because the moment people stop believing it is the moment they stop being untouchable.